CMC's markets platform has been developed since 2010, so it's a fully customizable platform. We offer a range of different ways that clients can set up their platform. You can have a fixed layout which sort of responds to the browser size. You can have floating layouts. You can spread it over multiple screens. But you've also got a huge range of tools. So there's obviously the charting package. It's an advanced charting package. Has a number of sort of pattern recognition tools that are built in. So it offers really the technical analyst a huge range of functionality. But also from a fundamental side, you've got sort of Morningstar equity research reports. You've got Reuters News, CMC Market Insights. You've got market calendars from Reuters News. So you've got a huge range of trading tools accessible within the app. And you can customize the experience to suit you. So it's unlike some other platforms where you're really stuck with a very generic sort of structure. So the customization is probably one of the biggest features. Clients are really after a lot these days, so the mobile platform is probably one of those features that we've invested heavily in creating one of the best mobile platforms out there. We have a huge range of features built into that, and a majority of our trades are now transacted on a mobile device. So building that out as we have, and building in the same sort of functionality we have on the web platform within the mobile platform, is probably one of the key aspects of what we offer here at CMC. Indices are probably one of the most popular traded instruments at CMC Markets. They really are a great way of getting a diversified access to the market. So you might think the market's going up or down in value, but you don't know particularly which instrument you want to trade. So indices offer you that way of getting access, but in a very much a diversified way. So these new indices and baskets that we're creating at CMC Markets, you've got a whole range of commodity indices, cryptocurrency indices. We're soon to release new products such as FX and equities. So we're building in a range of ways that clients can get access to these specific asset classes, but do it in a diversified way, which limits your risks, but also you can trade smaller amounts. So you're actually averaging in. So it's quite a powerful tool for traders, especially when they're getting into the markets for the first time. Yeah, so you've got like precious metals, you've got agricultural indices, So if you were looking at the agricultural market and you're thinking, okay, well, which particular commodity should I trade? You can actually say, well, actually, we might see that market going down or that sector going down, and you can take out an agricultural index with CMC Markets and get a very generalized way of, whether or not the market's going up or down. But it's not just that, like precious metals. So if you want to get access, quite often precious metals are seen as a safe haven to access the market. So when the markets are going down, you'll quite often see gold go up. Well, gold's not the only precious metal. It's not the only sort of safe haven for clients to go to. They could take out a precious metals index with CMC Markets and diversify that way. Yeah, I think there's two really common ones that you're aware of. Is that the first one is that clients don't place their risk management, so they get into trading, especially with CFDs and spread betting, where it's a leveraged trading instrument. So you only need to put in a small amount to take out a much larger position. Trading without having stop losses or take profits, the markets can move very, very quickly, and you could lose money quite quickly. So the first one is to make sure that you put on your stop losses and take profits. Second one is about risk, money management. So making sure that when you enter a trade, that trade you're looking for a higher take profit area than you are for a stop loss. So your risk to reward level, you're looking at maybe 1 to 2, risk 50 to try and make 100. That way you don't have to get it right 50% of the time. You can get it right 35% of the time to start making a profit. The last one I would say is over-trading. We're excited by the markets. We're day traders. We really want to get access, and it's an exciting sort of proposition. But getting into a trade just for the sake of getting into a trade, you'll quite often end up on the wrong side. So making sure you've got a strategy, make sure you actually look at the markets, decide when you want to get into a trade, and then execute a strategy. Don't just get in for the sake of getting in.